is Heart of Economy. Today, we are not presenting an ordinary market summary. We are discussing a statement that could go down in financial history. In June 2025, Martin Armstrong made the following declaration: "War is the exit plan." In other words, for some states, war could become a strategic part of avoiding economic collapse. This isn't just a political provocation, it's a deep economic analysis. According to Armstrong, we're at the end of a cycle. As the debt system breaks down, central banks became powerless and inflation spirals out of control. Governments may mask internal crises through external conflicts. In this video, we break down Armstrong's warning into key points: structural problems in the debt system, the limits of monetary policy, the possibility of geopolitical manipulation, and within this framework, strategic alerts for investors. Why is the debt system collapsing? As of 2025, the United States total public debt has reached $34 trillion. That's equivalent to 127% of the country's annual GDP. According to projections from Congressional Budget Office, by 2055, this ratio will exceed 156%. Moreover, the interest payments alone have hit $1.2 trillion per year, which means the US is now borrowing just to pay interest on existing debt. Martin Armstrong gives this situation a very clear label. This is a debt finance debt system. It works like a Ponzi scheme. And the biggest issue with this model is this: as long as it continues, the system appears solid from the outside, but internally, the burden grows every day. If the system collapses, it won't just affect the US. The entire global financial network structured around the dollar will be at risk. According to Armstrong, this collapse won't be sudden, but it will be unstoppable because the system has become self-consuming, non-productive, debt-dependent, trust-based, and open to manipulation. Central banks were once the heroes of their time. They kept the system alive in 2008 and responded to the pandemic in 2020. But today, the same tools no longer work. Rising interest rates triggers recessions. Cutting rates fuels inflation. Quantitative easing no longer inspires market confidence. According to Armstrong, this is not just a technical error. This is not policy failure, this is systematic blockage where the tools have lost their validity. Fed decisions no longer determine market direction. Even the ECB cannot shrink its balance sheet. Central banks are no longer problem solvers, they are just trying to buy time without worsening the fire. Armstrong delivers a sharp observation here. Politicians rely solely on central banks to buy them time. That time is now over. And this is where Armstrong's famous line comes in: "War is the exit plan." When a state can no longer manage debt, balance its budget, or maintain public support, a strategy kick in, manufacture an external crisis. This might not make sense militarily, but psychologically and financially it's effective. A society divided at home unites against a foreign threat. When fiscal troubles morph into a security crisis, security diminishes. Armstrong describes this tactic as follows: "It is not about escaping collapse, It's about wrapping collapse in another narrative. War isn't a direct exit, but it's one of the oldest ways to divert attention. History is filled with examples of this tactic. 1930s, post-hyperinflation Germany reshapes power through the concept of external enemies. 1970s, the US cuts the dollar's gold link. The oil shock is framed as an external crisis. 2000s, after 9/11, the Fed begins quantitative easing, followed by the Iraq War. Post-2008, as the Fed expands its balance sheet, geopolitical tensions rise. Armstrong's insight: financial crises don't directly cause wars, but they legitimize the idea of war. And today, we may be living through a new version of that cycle. As of 2025, the world is stockpiling tensions again. China-Taiwan tensions, the prolonged war in Ukraine, rising risk along the Iran-Israel line, infrastructure and energy wars in Africa, financial polarization between NATO and BRICS. All of these point to one underlying theme: financial instability. These countries may be experiencing military tensions, but the root of these tensions is an economic war over distribution. And Armstrong's warning is crystal clear. This time, war doesn't begin on the front lines, it begins in the central bank balance sheets. So, what does all of this mean for investors? According to Armstrong, traditional portfolio theories no longer apply, because systemic risk cannot be measured through technical analysis. Government bonds are no longer safe, dollar liquidity is fragile, digital currencies are traceable, banks are more exposed to state control. In this scenario, Armstrong's advice to investors is: physical assets are true security, gold, silver, regional diversification, everything else is paper. In other words, focus not just on profits, but on preserving capital. Armstrong's projection: between 2026 and 2028, digital central bank currencies could be implemented in all advanced economies. And this brings three serious risks: capital movement restrictions, account freezes, political limited access to assets. This isn't theoretical. It's already included in official G20 reports. It appears in public documents from the ECB and IMF, and Armstrong is unequivocal on this. Digitalization is not freedom, it's an invisible handcuff. Armstrong's statement, "war is the exit plan," isn't just a speculative remark. It's a defense mechanism embedded within the system itself. If he's right, the next crisis may not be an economic slowdown, but a political reorganization. At Heartofeconomy, we leave you with this question: do you believe war could truly be an exit plan? Or is it the harbinger of the end? Leave your comments below. Let's uncover the truth together.